Hey guys, it's Rob Guilty, Logical Trading, back again. And in the last video, I did promise you that we're going to talk about my idea to trading and my trading system, which we're going to do today. But I did also tell you it'll take me about 15 seconds to show you the system. It's all up to you at the end of the day, how many years it's going to take you to learn the patterns and the setups in the market. Now, I'm not trying to sell you a course. I'm not interested in any of that stuff. If you want to follow my trades, you're more than welcome to. You can go down to the links in the description, my blog's there, my Facebook page. Go for it, no problem. Every day I post a trade of the day on the Facebook page just for fun. It keeps me in touch and it sort of like lets me record my charts and that sort of thing. Day trading is easy. I've heard that so many times. It's not easy, let me tell you. Everybody will tell you it's easy and all the magic tricks and what have you, as we discussed in the last video. But guys, without further ado, let's get to it. Let's talk about easy trading, I suppose. Let's go for it. So guys, what is my system? What is my edge? And what I use is a very simple support and resistance method, or I'll use imbalances, or I'll use supply and demand, whichever's there. And the only reason I use that is because I can manage my risks so easily with that system. So in other words, I don't worry too much about all the other technical things that are going on in the market. I will throw an RSI in. I see on this particular program there is an RSI at the bottom. It's kind of a strange RSI because the one I usually use has only got one line. But anyway, all I use that for is for a reference point to see how overbought or oversold the market is and if there's some kind of divergence going on in the market. But further than that, I don't use it to trade. It's just a sort of a glance. The other thing I'll throw into my trading sometimes is a 50-day moving average, maybe a 20-day moving average, because price tends to act like a magnet towards a 50-day moving average, and or a VWAP as well. You know, it'll also work for you if you're using those systems. You can use Fibonacci as a confluence to see if your support and resistances or supply and demands have kind of landed up in a similar area to where you are, and that'll just give you that extra nudge to say, well, that's a good trade. But be careful of putting too many indicators in your chart, because what's going to happen to you is you're going to get mind boggled by while making a decision, because you're going to think, well, that's that, and that says that, and that says that, and it's just going to put you off trading, and you're going to stutter, and you're not going to make your trades. So be careful of throwing too much stuff on there, but you can use one or two things as a confluence as to like sort of say, well, it's actually a good or a bad trade, you know. Because what's the point of going long on a trade when the trade is actually tired out? It's a bit like going to the shops and the price has been pushed up so high because everyone's buying it and it's really expensive, and you just know it's going to go on special next week, so why don't you just wait till next week and get it a bit cheaper? So, you know, those sort of things are quite important. But what you have to understand in the market is what we discussed the other day, is a price has got a 50-50 chance it'll go up or it'll go down. There's no guarantees it's going to go in one or other direction. There's no magic system that's going to show you which way the market's going to go. Okay, it's kind of neither here nor there. The coin toss that we discussed in the last video, you know, it's 50-50. 5 you win, 5 you lose. You know, you just got to make more on your winners at the end of the day, because the more you understand this, the better. Let's say you want to buy something on the market. Let's say you want to buy 50 shares of whatever, okay? You have to understand, for you to be a buyer, there has to be a seller who's selling those 50 shares. And all things considered, if he's selling those 50 shares, he must have a good reason to be doing that. And you've got a good reason to be buying the 50. Between the two of you, you don't agree. You don't agree with what the system is telling you. His system is telling him to sell 50 shares and your system's telling you to buy 50 shares. The sooner you understand that, the sooner you understand that there's no perfect system. There's always someone that's going to have the opposite view to yourself within the system. Why is that? Because that's how it works, right? So the market works like that. For there to be something to buy, there has to be someone to sell. And for someone to sell, there has to be someone to buy. And these are buy and sell areas of supply and demand, where there are large buyers and sellers. And don't think you're going to go and take on the pro traders. Rather flow with them. Flow with them. They've got the money, they've got the information. Okay. So let's get to it. How would I actually sort of look at a market? And this is the S&P. It's right at the top here. There's a big resistance that it's actually blowing through this. There is another level at the top here. And you could actually trade this long with a view to it going quite high. But, you know, it has run so hard already. Now, if you just, like I said to you earlier, just have a look at the RSI, where it is. Seriously overbought. So if you're buying in this area, you are taking a chance. Okay? If you're already long, if you're already in this trade, then by all means, stay in the trade. And maybe bring your stop loss right up to behind it, because this is sort of like where your take profit area probably would have been, and allow yourself to take more profit. I wouldn't add to the trade here. We're kind of at the end of a cycle. I would actually rather on this one maybe wait for it to come back through the resistance. The support now, it's actually become a support, and make it into a resistance again, bounce off it, and maybe get a bit of a short trade. I don't really want to go short on something like this, which has gone so long. If you go into the daily, you'll see that it's in a long situation. If you go into the 4 hour, it's long. If you go into the 1 hour, it's long. So this arc is pretty long, and you don't want to be trading against that trend. So I would actually much rather stay in that trend. Now, what I would normally do on the day is I would go here and I'd actually look at changing it to a daily interval. Okay, put it on the daily and have a look at what you've got on the daily. Then what I'll do is I'll have a look at my support areas on the daily. Okay, there does appear to be quite a reasonable area somewhere around here. Let's just get that to stay. And there's also appears to be one somewhere around here. It doesn't have to be exact, so we'll just use this one. This one's good enough, right? So what you could actually do on the S&P, just as for example, and it could take a while for this to happen, but round numbers are really important. And if I look at this, okay, I see that this could, if it comes out here and bounces, maybe bounces back up to here, and then maybe comes down, it might actually come back down to the 4,400. So it might be worth waiting for a short trade, or it might be worth actually waiting for a long trade back off the 4,400. Now, the reason I say this is because if you look at, in general, December is a period where the markets tend to tickle up and move long, okay? If you look at money flows and things like that, you'll see that December is a very popular time for the markets sort of tick up. So there might be a bit of a correction in the next few days, beginning of the month, money flows, things like that. And if you get that correction, it might well be worth looking for long trades into that sort of period into Christmas, where you might get some decent income coming back off these trades. So I always say, look at the big picture as well. Look at the macro picture. Look what's happening in the world fundamentally, sort of just in the background. Is the sentiment towards the long side or the short side? Are people panicking? Are people buying? You know, be careful of that though, because when people are panicking and things have gone really short, it's sometimes a good time to take that long you know, you're going against the trend, but it might well be worth it. So yeah, so that's your S&P. If I look at, for example, let's say a euro, let's say euro CAD, yeah, euro Canadian dollar. That's big at the moment. Now, if you look at the euro Canadian dollar, no, let's look at the US dollar Canadian dollar. That might be more interesting. USD CAD. Let's see what we get. That's the yeah. Look at that. You see this? This was a nice trade recently on the long side, but it's become kind of short. And on the daily, if I look at this, you've got a nice sort of resistance up here. It actually goes quite far back. It actually goes up to there. And if you look here, you just got to be careful of this because you are actually quite down to the area where it's already at. You could take a short on this if it comes back up to around this 137 and come down to this area. You've got a nice sort of resistance down here as well if you look at it a little bit further down. So, oops, oh, does that to me. Anyway, but you could also bounce along here. Because look at this, you've got this uptrend that's been going for a long time. It might break through this, okay? If it does, then okay, it's short, but the way it looks at the moment, it seems to be in quite a long trend on the daily. And if we take this back now to the 4 hour, like I said to you earlier, we're trading on the 4 hour. So you do want to see, is it going to change over or what's going on here? There we go, 4 HR, 4H, sorry, okay, there you go. These things, I'll tell you what. Okay, now if you look at this on the 4 hour, you get a much bigger picture. And if you look at this, it might actually, if I follow this, it might actually come down to this area, okay, and then bounce and shoot straight back up again, because it is kind of trading in this range if I look at it. So, you know, you're looking at a possible move back off this support level here. It could be a demand, and it may actually go all the way back up to the top here. So that's basically what we're doing, guys. We're basically, it's a 50-50. It could go down, it could go up, right? So what you're doing is you're taking the bet. So let's say you take this trade long. So then what I would do is I would put my stop loss down here below these areas of well, the lows of that period, okay, below that, well below that, because otherwise the stops will sometimes take you out, but not far away. And that gives you 135.5 off a 136 long, okay, and you're going long with a target of around 138.5, which is pretty good. That's a pretty good risk to reward ratio, but I'll normally try and take a 1-to-1, so I'll actually take my stop quite far out, and then if I see my trade is going wrong, if I see my whole theory is blown up, then I'll just get out of the trade as close as possible to cost or at a really small loss. I won't wait for the stop loss down here, but you can put an emergency stop in a little bit further down just to give yourself room, because what these trades tend to do is they tend to bounce in and out, as you know, and if your stop loss is too close and you're not looking, it's going to take you out of the stop too early, right? So, but that's up to you. If you want to take a long stop, or if you want to take a close stop, doesn't matter. The close stop is fine. You're paying for the trade. If it works out, it works out. If it loses, it loses. Because what I find, if the trade starts going in your favor quite quickly, it's going to go good. If it starts chucking around and messing about here and not going anywhere, it's probably going to take out your stop loss and you're not going to get anywhere with it. So yeah, that's the US dollar CAD. I mean, we can look at, for example, there's the Euro Pound, which is quite popular at the moment. Euro British Pound. This one has been coming down. You know, I actually wanted to go long on this thing up here, and it looked really good, but I didn't. And luckily I didn't, because as you can see, it's come all the way down. And but yeah, it still looks like a really good long trade. Let me just move this out of the way at a later date, because if I look at this, you know, your general area at the bottom here, yeah, there you go. There's your major support down there. So there's your major resistance at 87.60. You know, if you look at this, if it does manage to get all the way down to this, then you might actually be looking at a pretty good bounce up trade. You know, you might actually be looking at something quite decent there for a long. That's actually quite far away though, but yeah, if it gets down to that, then you can go long on it, whatever the case. So that's about my system, guys. 15 seconds. I'm not too worried. So this trade, I will take it long. I put my stop loss down here, just below it, below the recent lows, and see if it'll take me all the way back to the top. It's as simple as that. And it's day trading, it's swing trading, whatever the case. Normally I would take these support levels off the day chart, move back to the 4-hour chart and the 1-hour chart. If you're looking for entries, just drop your time frames and you'll find your entries quite quickly in there. But like I say, and like I said in the last video, there's no guarantees in a trade. So anyone who's trying to sell you a magic, beautiful, wonderful system is actually lying to you. There's no such thing as a magic system that can make you hundreds of thousands of dollars in a day, or 2% per day, or this or that or the other. It doesn't exist. It doesn't work. Learn how to do the support and resistance first. It's easiest. Maybe add some imbalances, add some supply and demand into it. It's quite easy to work that out. Supply and demand, I mean, all you got to do is look for 3 big candles like this. Look at that, okay? And you can effectively take the candle before it, draw your thing in there, and there's your area. Okay, that's the area. And you can see it's come into that area, gone out, come in, gone out. So it's actually quite an important area. So there was a lot of money involved in that spot. Because there you can see the money pushed that thing all the way down. When it came back, it did unfortunately shoot straight through it, but it did come back to it again. You know, those are your supply and demand areas. I find support and resistance to be kind of your best, because it's either at the bottom or it's at the top, and you can look at getting yourself a trade. Generally, your support and resistance is best taken with your lower lows and higher highs as it's going up or as it's going down, and you get those little support and resistances in between. So yeah, that's about my system, guys. I mean, it's up to you to learn the patterns and figure it out. You can use chart patterns, flags, head and shoulders. The head and shoulders works really well. You can use candles if you want, double tops, pincer tops, all these types of different things. If you see a large red candle or a large green candle, it kind of gives you an idea where things are going. It's not that tricky, not that difficult at the end of the day. So yeah, trading's easy, but it ain't, is it? It's never easy. That's why 80% of traders lose, and that's why I always say, that's my risk disclaimer, by the way. You shouldn't even be doing this. Don't do what I do. Don't follow my trading example, because you're probably going to lose money. Okay, everyone does, and these are not the easiest things to do in the world. If you follow my trading, good chance to lose money. My trading at best is 50-50. You know, some you win, some you lose. So like I say, it's up to you. Figure your system out. What I will say, use your system. Use the system that you've picked. If it's a moving average crossover, if it's a Fibonacci, whatever it might be, follow it to the T. Follow your system closely, but also look at the way the market's moving at the time. You know, and work around your system. Don't be too rigid, because rigidity can sometimes, you know, bite you in the ass. Work with your system, learn your system, use your system, follow it, and take the trades religiously, and you'll probably get a win at the end of the day. The big thing is manage your risk. If you manage your risk, you'll probably be okay. Guys, it's Rob Guilty, it's Logical Trading. I'm done here today. Thanks for watching, and if you liked the video, do me a favor, like, comment and subscribe. It's always fun. And if you want more videos, let me know in the comments. It'll be interesting to see. Until next time, guys. Cheers.